Good evening, everyone. I'm Anamika, and the title of my paper is Harnessing Fintech Innovations for Financial Inclusion and Sustainable Growth. So, this shall be the broad flow of the presentation. So, to begin with, we all are aware that United Nations Sustainable Development Goal is a framework which provides, it's a global framework which addresses various challenges such as economic, social, gender inequalities, climate change, and lack of sustainabilities in various areas such as infrastructure or economic development, etc. And the first Sustainable Development Goal, which was established at the historic UN Summit in September 2015, it aimed to eradicate extreme poverty for all people by 2030. Now, to achieve this aim or this ambition, we need to have a strategy that addresses the economic disparities. Now, to address the economic disparities, we need to tackle income inequalities as well. And here, financial inclusion plays a very important role to tackle these income inequalities. Now, with the rise of advanced financial technologies, which is fintech, now it has become a driving force for economic change. Fintech is offering a lot of innovative tools which can help to address a lot of environmental, economic, social changes by improving efficiency and providing services which are very low in cost and also covering a lot of marginalized sections of the society as well. Now, when we talk about India, in terms of digital payments, the total transaction value is expected to grow at an annual rate of 16.31%. So it is projected to reach about $3.46 trillion by 2029. And the internet and mobile phone proliferation has played a very important role for India to move to digital payment system. Earlier, it was cash-based economy, but with the advent of internet and mobile phone penetration, it has become very helpful for India to move to digital payments industry. Now in 2016, even in 2024 also, India ranks second in the world in terms of mobile penetration with over 240 million consumers using smartphones. And with the help of government initiatives also, as of April 2024, about 95% of villages in India have access to internet, either 3G or 4G mobile connectivity. So that is the level of internet connectivity that we have here. Now in August 2014, the government of India, they launched a financial inclusion initiative known as Pradhan Mantri Jan Dhan Yojana. And this helped to enroll over 260 million people who were earlier unbanked. So that was a great initiative. And then further in November 2016, there was an initiative known as demonetization, very infamous initiative, but it ultimately helped India to propel into the digital economy. And by December 2016, India developed an API app-based payment system known as BHIM, which is Bharat Interface for Money. So it has helped India to move directly towards entire digital economy. It reached about 3 million downloads within the first month of its launch. And later on, Google also introduced a Google Pay app, which has now overtaken BHIM app. So it has more enrollments as compared to BHIM app. Now, when we talk about the connection between financial technology and sustainability, it is still in the early stages and a lot can be done in this domain. So there is a need to investigate various factors which drive financial inclusion and how it ultimately leads to sustainable growth. So when we talk about the extant literature, there have been few studies that talk about how fintech contributes to greater sustainability. It helps to advance green finance initiatives. And it also has contributed to reducing income inequalities, especially after COVID-19. Access to digital financial services became a matter of necessity, not a matter of convenience. Further, fintech can also be leveraged to cater to socially unprivileged section of society and also to unprivileged income groups as well. Now, fintech innovations like blockchain and artificial intelligence, they can help to further the cause of digital financial inclusion by offering improved security, efficiency, and transparency measures. And there are more innovations like central bank digital currencies, which has helped to improve and enhance the monetary policy transmission. So these are few studies that have been done that talk about how fintech and financial innovation can help in financial inclusion and ultimately impacting the economic development. Now, there is another group of studies which talk about that a supportive legal framework is very important for fintech development. So that area is also under research. So this is also a point where we can study more about how a supportive legal and regulatory framework can help to achieve financial inclusion. Now, when we talk about the research gap, there has been very limited research on how fintech innovations intersect with financial inclusion and sustainable growth. We also need to incorporate new emerging technologies like blockchain and AI within the research domain. Further, the challenges and opportunities which are there in the regulatory framework that also need to be addressed. And existing research suggests that there is further need to conduct some empirical research using surveys or interviews to be able to identify the real financial inclusion. Because when we use secondary data, it does not indicate the real financial inclusion on ground terms. So that is also an under-researched area. So this research aims to address this gap by using a mixed methods approach, where we are going to use both qualitative and quantitative data to understand the relationship between fintech, financial inclusion, and sustainable economic growth. So these are the research questions which we aim to address. How fintech innovations can advance the financial inclusion, how it can address the income inequalities, what are those barriers which are associated for fintech in terms of regulatory frameworks and policy frameworks. So these are the questions which we aim to address. And on the basis of these questions, we have these research objectives. We want to explore how what role fintech plays in supporting the sustainable development goals, what are the barriers and enablers for leveraging fintech to promote financial inclusion, and we also aim to provide certain policy recommendations on how government can create supportive environment for fintech growth. On the basis of our research objectives, we have identified 5 research hypotheses. This is, of course, not an exhaustive list. This is a work in progress. So this is just the preliminary research hypothesis that we have come up with. So we aim to use convergent parallel research design. Here we are going to collect both primary as well as secondary data. We are going to analyze them separately, and in the end, we are going to merge these results to understand the holistic understanding of this relationship. So for primary data collection, we are going to use surveys to collect data on fintech adoption, financial inclusion, and sustainability initiative. We are going to use multi-stage cluster sampling. And we are also going to conduct in-depth interviews with key stakeholders to understand the experiences, challenges, and opportunities on fintech's role in financial inclusion. In terms of secondary data, we are going to use the existing data which is there with in government reports, published research, and other databases. And we are going to use statistical techniques for analyzing the primary data, and we are going to use thematic analysis to understand the what kind of themes emerge from the in-depth interviews. And then the insights from both these data are going to be merged and to understand what is actually happening on ground. So now when we talk about the various proxies or various variables which we are using for our research, one is fintech innovation. So there are various proxies which have been used in the existing research. This is the list. For our preliminary results, we have used the 5th one, which is the total number of fintech companies as a proxy for fintech innovation. For financial inclusion index also, there are multiple proxies, but as of now, we have used the global Findex database. And when we talk about the sustainable economic growth variable, here, this variable is not a standalone variable. It is subdivided into various subsystems. So there is economic indicators, social indicators, environmental indicators, and regulatory indicators. So we have subdivided it into various subsystems, and for each subsystem, as of now, we have taken one variable each, but we aim to expand our research. So when we talk about the economic indicators, we are taking GDP growth, and this is the database. For environmental sustainability indicators, we are taking renewable energy share in total energy consumption, and these are the data sources. For the social sustainability indicators, we are taking two variables, income inequality, which is the Gini coefficient, and gender equality indicators, and this is the database. And for governance quality, we are taking the ease of doing business index. But we definitely aim to include more of the proxies to understand whether the results are same across all these proxies or not. We are also including certain control variables which may impact the results. So we are taking gross capital formation, population, government expenditure, and so on. So this is the proposed model which we have identified as of now. So here SEG stands for Sustainable Economic Growth. Now this again is not the standalone variable. There will be 4 subsystems within this. F denotes financial inclusion index. FI innovation denotes fintech innovations, and so on. So this is what we have proposed. And as of today, we have only conducted analysis on the secondary data because we are still recruiting research assistants for primary data collection. So far, we have only analyzed the secondary data. And preliminary results have been promising, but we are not relying on these results solely because we are still waiting to include the other proxies also. So preliminary results are like this, that fintech innovations have positive impact on financial inclusion. Financial inclusion has positive impact on sustainable economic growth, and supportive regulatory frameworks positively impact the fintech innovation. So these are the preliminary results that have come up through the secondary data analysis. When we talk about what is the relevance of this study, so this study is relevant both for policymakers as well as for the society at large. When we talk about how is it relevant for policymakers, so it is going to help the policymakers to develop regulatory frameworks that will enable fintech companies to innovate. So there are no barriers for fintech companies to enter. It will also help to enhance financial inclusion through targeted policies to these sections of the society which need more support from the government, and also to mitigate barriers if there are any barriers for fintech companies to enter the industry. So there we need to take steps that how we can mitigate these barriers. So this will be relevant for policymakers. When we talk about how it will be relevant for the society, so obviously it will have direct implications for the low income groups as well as for the women as well. So we will also look at how there are gender inequalities in terms of financial inclusion and financial knowledge as well. And yeah, this research can play a huge role in reducing the social equity apart from income inequalities as well. So yeah, that's all from my side.